How do credit card companies calculate the minimum payment due? Even though credit cards are the source of a lot of people's financial challenges and problems, they can be a very useful tool. Case in point is helping to build credit, which is what my son is using credit cards for. And his recent statement inspired him to ask this question. So I'm having yet another proud papa moment because my son is taking an interest in such things. Well, to answer his question, there are three ways. The first is most credit card companies establish what they call a floor rate. So when you get your bill, your minimum payment will be the greater of a predetermined amount or a calculated amount. And by a predetermined amount, usually credit card companies will set something simple like $15 or $25 as the lowest payment that they'll hit you up for. Now, of course, if you have less of a balance than whatever their floor rate is, then that'll be your minimum payment. For instance, if their floor rate is $25 and you only owe $20, well, then your minimum payment is going to be $20. Hey, let's kill this zombie while we're here. Why not? So the second way that they utilize to calculate minimum payment is a flat percentage rate. For instance, a lot of credit card companies will just say, 2 or 3% of whatever the balance owed. And so that will be, so when I say calculated rate, it'll be the greater of either that 2% of your total balance or the floor rate that they charge. Now, when it comes to these things, kind of a good rule of thumb is if you are using your card, like my son, to build credit, then more than likely you're going to get hit with the floor rate all the time because you should only have roughly 10% of your total credit usage is what you should be doing in order to build credit. Where did I leave that other body? Darn it. Crap. All right, well, it's no big whoop. Anyway, the third way, there it is. The third way that they calculate your minimum payment is kind of a combo deal. So it'll be a lesser flat percentage rate, and then it'll be your interest that you had accrued on whatever your balance was that you owed, plus any fees that you've got. I did a video recently where I talked about late fees. There can also be over-limit fees, things of that nature, and they'll hit you up for those. Let's get going towards the box. Getting all distracted here. So that's the third way that they will calculate your minimum payment. All right, now federal guidance instructs issuers to avoid any sort of negative amortization. Now what that means is that your minimum payment kind of has to include some sort of principal as a portion of what you're paying. So, in other words, you're not going to be paying less than the interest that's accruing on your balance. And that is a good thing. That way you don't end up being charged ultimately interest on interest and going deeper and deeper into a hole rather than paying your balance off. So that is one good, we'll call silver lining. Okay, now, how do you find out how your particular company determines your minimum monthly payment? Well, that could be just a smidge more challenging, okay? Usually they tell you, your minimum payment is this, but they don't elaborate a lot on that. So when you first apply for your credit card, if you kept the pamphlet, there's a chance that it'll be in there. If not, then there is another chance that it may be on your statement, your bill each month. If it's not there, you might be able to find details online if you're using the company's app, something of that nature. Of course, if none of those are giving you exactly and you're just that curious, then you can always call customer service on the back of the card and find out. So, once you've got that, it's useful to know that as far as the flat percentage, usually that's common amongst credit unions and subprime lenders. Subprime lenders are lenders that issue cards to high-risk individuals, people with lower credit scores. Your ones that tend to charge a smaller flat percentage rate plus the interest plus the fees, that's usually your larger institutions and folks that are used to dealing with people that have slightly higher credit rating. Let's get this guy so he doesn't bother me while I'm getting my crate. Okay, well, just as an FYI, I recently looked at my statement. Okay, I had to get some phones and some other equipment recently, and I ended up putting that on a credit card. Got that statement, looked it over. I'm one of those that's paying, I believe, the percentage plus interest plus fees kind of thing. I've got an outstanding balance of about $2,600. My minimum monthly payment is $81 right now. 27 of that is principal. That means that the other 54 is the interest that I'm being charged. I don't plan on carrying that balance forever. It was a recent purchase, so I'm planning on slamming it down pretty quickly. But on the statement is something that you need to know. Federal law also requires credit card companies to keep a minimum payment warning on their statements. That tells you how long it's going to take to pay off the balance that you owe just paying the minimum monthly payment. So in my case, the warning stated that if all I do is pay the minimum payment, I am going to be paying on my $2,600 balance for 13 years. And all told, at the end of that, I am going to pay over $6,700. So that is enough to help motivate you to pay more than the minimum payment. Now, I've talked about ways to pay down debts before. Some helpful methods to do that. There's the snowball method, and there's a couple other methods. I prefer the snowball method, so that's all I typically worry about. But you are welcome to watch that video. I'll probably tag it in the cards for this one. But on that warning, to get back to what we were talking about, on that warning, it gives you, on mine at least, hey, if all you do is pay an extra $25 a month, here's what it looks like. And it calculated it out, and I would have my debt paid off in 3 years, and I would only pay $3,800. So I would knock 10 years off of how long I'm paying on that credit card debt, and I would save myself $3,000 just by paying a measly extra $25 a month. Now, that is the power of taking advantage of some of those snowball methods and whatnot, guys. It doesn't take a little, but a little to accomplish a lot. So that's the note that I want to kind of end on and leave you with as I battle this last zombie. If you've got any questions about that, as always, you can leave them in the comments below the video. And of course, you can send them to me at fussyandfinance@gmail.com. You can hit me with it in the chat. And if you're finding these videos useful, hey, tell your friends about them, because nobody is really bothering to educate your friends about this stuff. They're not getting it on their own. And I promise you, even if they seem to have all of their stuff together, they'll probably find some value in something that I share sooner or later. So it'd be worth it for them to check me out. Maybe you might know of an area that could benefit